questions. There's a novel concept, GoToWebinar. Let's let people see each other's questions like every other web host. Laszlo, how are you doing? You still kicking butt with the E-mini S&P? Hey, Bob. Everybody, I'd like you to meet Bob Mason. He's out on the West Coast this morning. He got up super early just to check out what we do. Bob was on a similar journey that many of you are on, and he's here evaluating the software this morning. So, Bob, feel free to ping these people. They're here to learn and earn, but if you've got questions or you want to try to connect with somebody, please feel free to reach out. Got a good group of customers here this morning. Hey, George, how's life in Hungary today? Everybody survive after the Trump tour in Europe? It's hot. Wow, okay. Well, that's what happens when you use all those plastic bags, George. Next time you have to ask for paper. It's all good. Well, hey, good morning, everybody. We are going to work our way through the charts today, learn a few things as we go, teach you some stuff you didn't know you could do with your software, hopefully. In terms of reports today, we've got a few of them. Today is the U.S. Beige Book. Just have to deal with something real quick. Ron, that guy tried his wacky Visa card again and it didn't work again. So I canceled his order so it doesn't try to redo it 100 times like Umar's. He's under the impression that it's ready to go. Sorry. Okay, so what we're going to do is we're going to work our way down from the daily charts to the minute charts, get a bird's eye perspective of what's going on out on the largest time frames, and then walk our way down to the intraday time frames. We'll be looking at the mini S&P, crude futures, gold, the NASDAQ. Anything else you'd like to examine, we can take a look at. But on Forex, we're going to be looking at the pound dollar, the euro dollar, the CAD, and delving into those as well. Last time we got together, we did a bunch of stuff on some end of day analyses, and that side of things is really starting to grow, and it's been really interesting to me how we've gotten into that that side of things. how we've sort of evolved into those things. And I was just wondering if you'd like to go over any of those daily bar forecasts that we did. For example, you guys all remember the one we did for the 6B a couple weeks ago, right? And we drew those blue lines and said basically which direction it was going to track. And this was back here where we did the analysis. And you can see what's been happening since that analysis. So is there an instrument you'd like to look at for us to follow up on, maybe for the daily bar analyses, and sort of go through those processes again for those of you that own the Flex Daily Cycle Markers or the Flex Orion? Big picture stuff. I usually have to beat you off with sticks when I ask that question. Anybody? George, we still have your pound yen up here. Can you see what it's been doing since our analysis? Those red and blue lines that we drew. Is my computer working? Can you guys hear what I'm saying? Or did I lock up? Oh, all right, so everybody's just unconscious today. That's fine. Not as always, but were you following it along at home? Okay. Whew. Well, let's start with the S&P. I'm going to volunteer my own my own answer here. When Bob M, when we spoke last night about the four different celestial influences, this was the one with the four phases that we talked about last night, and we'll be going into the other one here shortly. The Flex Daily Cycle Marker tool has four different phases that it's tracking and telling us what's coming next into the future. And so the last time we got together, we noted that when we got to a phase 3 on the ES, starting back in January of this past year, when we got to a phase 3, the banks, 3 out of the 4 times, had driven the market higher into the phase 4. Had driven the market higher into the phase 4. Had driven the market higher into the phase 4. We also noted that when there was a lower low pattern 4, phase 3 or 4, the market got driven higher. And so back here on May 18th, when we had our class, I noted to you guys that not only was this a phase 3 like it was back in April, but that it was a lower low phase 3 or a pattern 4 phase 3. And Bob, you can see, pursuant to our conversations last night, what happened on the pattern 4 lower low phase 3. Now, I'm going to strip away all our stuff. We're starting from scratch, right? Here's everything that's been happening in this crazy market since back to 2015. And what I'm going to do is I'm going to just isolate the pattern that we have right now. I found this was a good technique the last time I did it with somebody, so I want to try it again. We are in a phase 4, so the only thing I'm going to leave on the ES is a phase 4. And what can you guys tell me about what usually happens at a phase 4 event in this crazy market of ours? What do the banks generally try to do until the next big green dot? Take a minute, talk amongst yourselves. Looks like half go up, half go down, push it down, retrace. Okay. I'm going to define the question better. When the red dot appears at the high of the move, meaning it's the highest high, let's go back and isolate the ones that are at the highest highs, because those tend to emerge ones that appear at the top of a move. And we'll stick with this year just to keep it on the same screen. When you have a red dot and it's near the higher high, meaning it just broke a brand new high. Good morning, Chris. In my estimation, I'm going to put the phase 2 back on, which is the big green dot. One of the things I notice in this market, guys, one of the things that I hope you notice is that almost every time lately, they're higher. They're higher by the next phase 2. They're higher by the next phase 2. Can everybody see that? The last 1, 2, 3, 4, 5, 6 of those, 7 of those, since November of last year. Earl, even though there was a retracement, they finish higher by the next phase 2, which is coming in 8 days and 15 hours from now. What do you think of that? Interesting, right? And it wasn't until before the election. It was before the election, Chris, that they would do the opposite. They were lower by the next phase 2. Do you see the difference, Earl? This one was opposite, so I'm going to put an X here. Actually, they went up here too, didn't they? That one went down. That one went down. That actually went up. Most of them have gone up, in fact. There's only a few that have gone down. So the more powerful signal, the one that's generally been more reliable to us in terms of long entries for options, for example, has been the phase 1 and the phase 2, the green dots in the uptrend. But one of the first things I want to take note of is that just because we see a higher high red dot right here doesn't mean anything, because we had a similar circumstance over here. Again, we're just trying to reverse engineer the bank's playbook. What do they do when they get to this time? They did it over here, Earl. And they did it over here. It was a brand new all-time high right there. And then Earl, they psyched everybody out and dropped it down. They went back over here a second time. And can you see how they psyched everybody out a second time, Bob? They shot it up and then they dropped it down. Okay. This was a lower low red dot over here, pattern 4. So it doesn't qualify in the same family of plays that the bank was running. And so now we've just run into a higher high. And so of the patterns that match the bank's playbook, what we want to look at and see is, well, how far did they run it up in the past? From the high of this pattern 4, phase 4 rather, they went this high, Bob. From the high of this phase 4, they went that high. So if we copy and paste those, we harvest that information and put it over here, we start to build a theoretical castle. Meaning, Ernie, I believe the ES has the potential to now go as high as 24.28 quarter, or as high as 24.47 in the next 8 days and 15 hours. Does that make sense, everybody? Just based off of what that exertion level has been in the past. Now, I call this an exertion level analysis. How far does the bank drive at this phase when it arrives at this phase? How much energy do they commit to it with the exertion level analysis? And so one of the things that's fascinating to me is if we take this blue box that we just drew up here, Dennis, come over here to this phase 4 from the high of its candle, and can you see how high the banks drove from there to there, and how it's nearly identical as how far they drove from here to here? So from the high of this phase 4 to the high here, Dennis, it's the same size or the same exertion level as February 27th from the high of this candle to the high of that zone. And so now you start to go, oh, what about the one that was a pattern 4 just to the right of that one? And so, Dennis, I'm going to take this box, this exertion level, and I'm going to pull it And Bob, do you see what happens when I put it on the high of that signal right there? So this box is the same across all of those patterns. I've literally copied and pasted it 3 times. It's identical. Okay, let's do it a 4th time, shall we? From the high of this candle to there, it got halfway there by the close of the next phase 2. So what I'm going to do is I'm going to pull this one off. And Dennis, I'm going to copy paste this one over here. And you see how that one fits better? By the next phase 2, it made it this high, which is the same as over here. So I'm going to color these 2 boxes a different color. We'll make them, I don't know, green. So there appear to be 2 exertion levels. And we've accounted for both of them over here, Bob. Possibility A, possibility B. Everybody so far so good? So in theory, we have from 16 to 28. So there are 12 ES points on the table right now in the next 8 days, if they follow the same playbook. Okay. Any questions about any of this? I think it's pretty fascinating stuff. So there are 2 exertion levels on the ES right now. The big blue box and the little green box. If it's the big blue box, which has been more prolific than the little green box, then it's from 16 to 47. 16 to 47 is as high as we're going to go. So those of you that are looking at options or calls or things of those nature, this is something that I'd strongly suggest you do some research into. Okay. Anybody have any questions about the exertion level analysis? I'll leave this chart right here. Let me open up a second chart for the ES. Hello, there's our 6E analysis. Boy, we went a little nutso with that one, didn't we? We'll leave that one down here. The second thing we can do with the Daily Cycle Markers tool is we can do a horizontal analysis of support and resistance. When Gann first came across this technique, he noticed that anytime you found an important time, there was an associated important price. He said that time and price were sort of twin brothers that were always joined at the head. You couldn't separate the 2 things together. So here are all 4 of those phases. Same indicator, right? But now I'm going to put a resistance line by using this parameter in each of the phases. It says show raise phase 1, true. Show raise phase 2, true. Show raise phase 3, true, and so on. And now you're going to see a bunch of horizontal lines here. Everybody see those? In essence, every time there was a daily cycle marker that closed, the closing price on that day spawned a resistance level off to the right. All right. Now, what's fascinating about that is if you start to look on the lower time frames, hello. Why aren't the levels carrying down to the lower time frames? Because we're above the lines. Is that why? No. Where'd my lines go? Oh, there they are. Bob, can you see where the prices have been bouncing in relation to those lines? Let me make it easier for everybody to see here by getting rid of those session break lines. So Dennis, anytime there's a time cycle marker on any time frame, if it's a daily cycle marker, if it's an Orion marker, if it's a 60-minute marker, a 5-minute marker, every one of those times that the computer finds has an associated resistance level. So look at what Gann says we should see going back 100 years. Now, by a study of the time periods and time cycles, you will learn why tops and bottoms are found at certain times, and why resistance levels are so strong at certain times, and bottoms and tops hold around them. So there's this implication that once you find the time cycle and you've got that half of it nailed down, there's a buy one, get one free. There's a resistance level that becomes associated with that time, and it spawns forward into the future. And when price comes back to that level, a top or a bottom will form depending upon the incoming attack. So as we look at those daily cycle marker lines on the ES, there's profound reactions at those levels when the market gets there. Well, part of the problem is that we're at these all-time highs. And Bob, you can see where the last phase 4 spawned a resistance line. And on my chart, that resistance line is at 2413. So for a minute, let's just look and see what the reaction to 2413 has been. Do we see tops and bottoms forming around 2413? And I just want to point the obvious ones out for myself, just to see if I'm deluding myself. And basically, I want to see these touches. I want to see these tops and bottoms, the ones that are really obvious, Dennis. Okay, so can we say essentially that this 100-year-old theory that Gann told us he saw a century ago, the resistance levels from the time cycle, can we say that tops and bottoms are forming around it at this point, Earl? Pretty safe bet, right? Okay. Now I want to share what to do when you've got nothing above you. What to do when you've got nothing above you. Let's pretend this new cycle wasn't here yet, Earl, because the same thing happened back in the last phase 3. We had nothing above us. It was wide open skies. So we didn't know what the resistance levels were going to be or where the market was most likely going. There are 6 laws of time resistance that I've stumbled over. and I'll make it bigger so we can all see it. And I'll say these 1,000 times till everyone gets it. Law number 1 is to the tick resistance. Number 2 is missed by 1 tick resistance. Number 3 is wickiness at the lines. Number 4 is consolidation between the lines. Number 5 is respect of the 50% rule. And number 6, projection of the last gap. There are 6 laws of time resistance. Number 1 is to the tick resistance. Number 2 is missed by 1 tick resistance. Number 3 is wickiness at the lines. Wicky, 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 wicky. Wickiness at the lines. What I call birds on a wire. As we get closer and closer to the lines, Dennis, the markets tend to push off like these wicks here. You see how they try to pierce it and puncture it. And they drive right away really quickly. Number 4 is consolidation between the lines. I'm going to skip with you to number 6. When you don't have any lines above you or below you, the 6th law is the most important one. It's the projection of the last gap. So Earl, in this case, I'm going to use a rudimentary method at first. The last gap between the last 2 daily cycle marker lines was from 385 3/4 to 395 1/4. The market has memory. Time has sort of this DNA code, and it has instructions in that code to do certain things. So if I take that box, Earl, and I copy it and I paste it, and then I take it and I copy it and paste it again, then I take it and I copy it and I paste it again. It's like a piano keyboard. I'm measuring how far it might go next. And it's usually at least 100%. So what I'm going to do is we'll get rid of everything but the text. And I have a fib tool that I built for that, where I take the last 2 lines and Earl, do you see here how I have minus 100%, 200%, 300%, 400%? Everybody, so far so good? Okay. The last one is the respect of the 50% rule. Once you have your gaps, you can start cutting them in half. So let me set that right here. So now every one of these gaps, Earl, I'm going to cut it in half. And then I'm going to cut it in half. Are we seeing tops and bottoms form around those 50% lines, Dennis? Or I should say, do you see where they're tagging those halfway points? or missing them by 1 tick. Okay, now when do you stop? You stop cutting it when you've accounted for every one of the pivots, or the majority of the pivots. So I'm going to go back now, Bob, and I'm going to cut what I cut in half before a second time. And again, this is all based off of the last gap. None of these lines that we're looking at right now were even on our chart. Now, how weird is that? Because look at where the pivots, Bob Mason, are coming in. Right? Can we say that it's almost using these lines like the rungs of a ladder? It's almost like a slinky climbing up the ladder in reverse. So if you knew how to do that technique back when there were no lines over here, you'd have some idea of where to buy pullbacks. How about that? You'd have some idea of where to buy pullbacks in the uptrend. Any questions about those two techniques? Because I'm about to do what we just did on the new phase all over again. This is the most powerful support and resistance technique I've come across in 10 years. Just based off the daily cycle marker lines. Haven't found one, this technique, the 6 rules, that I've come across that's this easy to do and this powerful. So let's get rid of everything. Boom. Because Dennis, look, we have a new line, right? There's a new sheriff in town up here. But there's nothing above us. So one of the first things I can do, Bob, is I can use rule number 5. I can cut this gap in half. And then I can cut that value in half again. Everybody so far so good? When do I stop cutting in half? I stop cutting in half when I've accounted for the majority of the pivots. So Dennis, I'm going to go one more pizza slice. And it appears that if I go one more pizza slice on this 15-minute chart, I've accounted for almost every one of the pivots, or where the market is putting in highs or lows. Bob, even explaining the overnight price action over here, right? We were in between these two lines for almost a 20-hour period. Okay, so now I'm going to take these lines below us, and Dennis, I'm going to copy them above me. I'm going to take these lines below us, and I'm going to copy them above me. I'm going to take those and copy them above me. because the market has memory. It knows where it's supposed to go next. So where's that upside level that we haven't hit yet? It's right here. 24.18 quarter. The one above that in the slinky is 24.20. And then this one is 24.2275 or 24.23. So 100% of that is 24.23. Well, back over here on this chart, remember where we said the green zone was? That's 24.28. So we're not even anywhere close to that. So along the way today, if you see pullbacks to 24.14 area, 24.16, 24.18, 24.20, 25, 24.22, it looks like the round numbers. Those are places along the way that we should see a bounce and then a push up to the next two lines. A bounce and then a push up. A bounce and then a push up. A bounce and then a push up. Does that technique make sense to everybody? Look at the reactions where the market's pulled back to these lines. Look at the reactions where the market pushed up into the line. This one was the breakthrough. When you have a breakout now, I'm expecting this junk because you're having higher highs and higher lows put back in. So these are all the places where you want to make your stand. Quite a bit of information from one indicator, right? That's a lot of stuff. Okay. Any questions about this? Or the 5 laws, the 6 laws? Everybody good so far on that? Okay. What's the other technique that we've been playing with on the daily charts, everybody? I'll leave this in the workspace too so we don't mess it up. You can go back and analyze those. What's the one technique we've been messing with lately that's been really cool? Dennis, one of your favorite techniques from the Vegas show. Vegas seminar, sorry. It's not a show. The angles. Okay. Let's take a look. Gig, you liking that tool? Even though Ninja is a jerk and has all those issues with it. Okay. So one of the things we've been exploring, and we're going to do it by hand for everybody here who doesn't know yet. We've been exploring how every one of the times that we've been analyzing has 2 components. Bob, it has a vertical component, meaning when we see it, we expect a release of energy vertically, either up or down. The markets don't tend to just die at a time. They tend to become energized one way or another. And that's the foundation gig of the game on breakout trade, right? When we get to a time, it tends to push out of a range and go someplace else. Well, we also just discovered that every time Bob has an associated resistance level. It goes this way, and then we also just had the vertical, right? So there are these two forces at play, the vertical and the horizontal, in every time series. And one of the things we started to explore very successfully, and there's a tool that's built for this already on Ninja 8 that I don't want to show everybody until our class on it here later in the week, is there is always a hybrid. There are angle lines inside of that zone where the market is resonant. So Dennis, just using that one example that I drew, the horizontal and the vertical, I want you to see with your bare naked lady's eye what happens at that angle. It almost looks like a 45-degree, right? You see that the market is riding that angle up, comes back, attacks it from below, and then drops. Well, if we didn't have an indicator and we had to do it by hand, there's a pretty simple way to find what that dominant angle is. Because there's no such thing as a high or a low that got there randomly. And so one of the things I do, Gigs, I look for some obvious trends where the market was sort of riding that channel like a rail. And then I fit it around to see how close was I on that. And you'll notice, Bob, that if I find the right angle, that it works just about everywhere, meaning it defines excuse me, it defines the channel almost everywhere I go. So the first thing I'm doing here, Gig, is I'm just sort of walking it backwards. And that seems to be the closest I can come manually by now. And by that, Bob, here's what I mean. When I have an angle that's close, I start copying it and pasting it. And I attach it to all the orphan pivots, all the pivots that don't have a line attached to them. And Dennis, I'm just working my way up. And what we should start to see, if the angle is correct, we should start to see these channels defined and touches and bounces just like the horizontal lines did, right? So Bob, are we close on those angles right now in terms of where the market rattled back and forth between? If you look over here, what's fascinating to me is that an angle that we picked from last year defined that. And it's the same angle that defined this. Now remember that 50% rule, Dennis, that we talked about? You would know it as divisions in the new indicator. Bob, if I took this line with the trend tool in NinjaTrader, the trend channel, and I just said, all right, I want to go from here to here and there. But now, Bob, I came in here and said, show me the 50% of that line. Do you think we'll see touches and bounces along it? And did we? Sure as Shinola. So when we're looking at the hybrid of time and price, the angle, all of the 5 rules carry with us. To the tick touches, missed by 1 tick touches, respect of the 50% rule, consolidation between the lines, projections of the last lines, and so on and so forth. So on the ES, where's our last gap? On the ES, our last gap was between this line and this line, right? So what can we do? Well, we can take the trend channel tool we can copy it, or we can put a 50% in just like we did before. We'll make it dashed. And now, Bob, I can take it, copy it, and paste it. Anybody see any market memory there? And I can take it and do it a second time. So those 4 lines are brand new lines. They don't exist yet. But because of the 6 laws, we know that we can do it. And we know what we'll expect to see when we get there. So today on the ES, looking at this, we're going to see resistance at 24.19. 24.19 is the first place we're going to see resistance on the ES. Based off of those last lines that we had to work with. Does everybody understand how I just did that? Okay. Now, while we have those lines going down to the right, we also learned, Dennis, that there are lines going up to the right as well that are equally powerful. And the market tells us what the angles of those lines are by the evidence that it leaves behind. So if you didn't have the Flux software, Bob, can you see how this line that I just drew has the multiple touches now along it? And we'll give it a different color. Green. There we go. So let's explore this idea. On this side of things, can everybody see how it had a touch here, 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 and here on the way up? No, Dennis, they do not change. Now I have a conversation with another trader. His name is Ernie. Ernie says the lines change. I haven't seen them change yet. That's the whole basis for your resonant line indicator. But now, Bob, you see when I just copy that line and I paste it up here, what the reaction is at those orphan pivots above? You can also see how it defines this right here, those two highs. And then, Dennis, I can come up one more box to that orphan pivot right here. And I can come up one more box to that orphan pivot right there. When do I stop drawing lines? I stop drawing lines when I've accounted for all the pivots. Because the pivots are the aftertaste of the invisible support and resistance lines. The pivots are the aftertaste of the support and resistance lines that are there. And now a very interesting thing occurs. I think we have our own square of 9, but we arrive at it a completely different way than Gann did. I think we arrive at it a completely different way than Gann did. And Dennis, one of the things I start to notice is that the market, like a video game, is occupying, it's like a Candy Crush grid. There are times where it occupies a certain box. And then gig, we move from box to box. And we test the constraints of each of those boxes. The last one was this box here. Remember, that line is a 50% line. It wasn't a real line. That's one that the software drew. The real lines are the green and the blue lines. And gig, you see how we occupied that big box right there? Well, now we're in here. And so, as time moves forward, into the future, we can only go a box above or a box below. We can only go a box above or a box below. We can't go to the left. So there are boxes waiting for us in the future, these trend lines that are based completely on time. You have this one over here to the right. And let me just introduce a caveat here. I'm learning this as you're learning it. I'm literally, as I'm drawing things and saying things to you right now, I'm realizing that I'm saying them for the first time. So this is stuff that I've never said to anybody before. Take it with a grain of salt. The lines that are now active, Dennis, are here. We're going to make them glowingly obvious. Super fat. Make it solid. We have the one below us. And you're going to see huge reactions when we get to these lines. We have the one above us. And then gig, the one just above that. Looks like a zigzag, right? And then you have this one down here. Everybody see how I drew that? Nathan had a great point. He said, Michael, it seems like the market conditions are choppier when the box is smaller and more volatile with trend when the boxes are bigger. Absolutely. Nathan, it's the same thing we learned when everything was horizontal, right? When the lines were so many points so far apart, it was choppy. When the lines were bigger, we had bigger candles. So there's something here that makes me nervous, and I tend to think, gig, we're going down. Can anybody here, based off of what we talked about so far, can you see why I think the ES is headed maybe down versus up? Based off of what's going on in this box right here. I tend to think the ES is going to pull back to the lower yellow line first. The wicks at the top have something to do with it, yes. Okay, the line that I'm looking at is right here. And here's what I noticed about that line, Nathan. In the past, when the market continues higher, remember one of the rules was to the tick touch, and then the other was missed by one tick. We came right up to it here, but Nathan, we missed it. We actually missed it by one tick. But over here, I know the line was right because of where the bounces were occurring. So Nathan, you can see where the candles actually touched that line, right? But when they came up to it from below, they missed it by one tick. There's a gap there. They completed the cycle here, and they completed the cycle here. And just a side note for those of you that are interested, notice the reaction at the crossroads. Notice what happens when we get near the crossroads of these boxes. So gig, there seems to be this sense of, as we're coming into the crossroad from below, we drop down. And as we're coming into the crossroad from below, we drop down. And we're coming into the crossroad from above, we go up, right? So these intersections are important, but the thing I wanted to point out was up here, Nathan, we didn't tag this line yet. We didn't tag it. We were 24.18 to 24.19 and 3/4. We were, was that 7 ticks away? Well, what I'm wondering is, when we don't tag the boxes, gig, when it's coming up and it gets towards the right side and it doesn't tag, look what it tends to do. It tends to fall away and go down to the next line. So I'm just saying be careful up in here because it's more similar, gig, to what this box is doing. Compare these two boxes. Ready? We'll take a screen grab of this one right here. So here's this box to the right. And gig, here's the current one. And I know this may be a little heady for some of you, but I have to say it out loud, otherwise I don't learn it. Dennis, when I look at this box that we're currently in, Gig, it bears a resemblance to me. I don't know, maybe I'm wrong. I can be. I have been known to be. But it didn't hit this line. Just like over here, hasn't hit this line yet. And so I'm wondering, Gig, if it isn't destined to come down to here first. Let me take these two off. I'm wondering if it isn't destined to come down to here first and then repeat the pattern. Dennis, what do you think? What do you guys think? Nathan, Brent, am I off my rocker? It's possible. Either way, we kind of know the two active lines right now. And so for your market, that's 2402 and 2419, 19 quarter. So I'm going to put my wager here on that chart. And I'll put a question mark there. Just because it hasn't touched that line. No touch. Touch me in the morning. All right. That is an exhaustive study of the S&P. If CNBC called me, Jack, I would close the company. And I would send DVD, Blu-ray copies of the interview to everybody I knew. That for me would be for some reason, even though most of you jamokes are super successful with the software and you're living your dream, for some reason in my head, I think that's validation, and I battle that because I know that validation is the fact that you're using the tools that Ron and I built and making livings with them. That's validation. But for some reason, you kind of want that recognition. But I don't think we're going to get it, and I kind of hope we don't. I think the world hates us for a reason, because like I was telling Bob last night, when they looked at Gann's work, they were not impressed because they had to think. Yep. So I think that's what we're going to see. All right. Hey, that's enough daily bar analysis for that. Let's go over to the main histograms. I'm going to save this workspace so you can go back and review those lines for yourself. Bob, I'm pretty sure those construction lines will come over for you even though you don't have the software. I'll get you a copy of that here momentarily. Now, on the 60-minute histogram charts, this is what most of you are used to seeing. On the ES, one of the things I want to point out about the ES is that most of the lines have been spot on. Most of the dots have done what we've expected them to do. When we got together last, what was the date here? The 26th. On Friday, when we had our live session in the room, I told everyone to look for the ES to go up on the close of this candle, and I had drawn this blue circle, and I told you where in the histograms to watch for the push up, and it was fairly reactive there. It went from 408 to 415 by the next time cycle. Okay, well, we've got some similar bumps in our histogram here, what Carrie and I used to call, Carrie, another Flux customer, would call stealth signals. And I want to point those out to you here this morning. We're currently in a selling pressure phase right now between 8 o'clock Eastern Time and 4 o'clock Eastern Time. However, in the MACD histogram, there are some deviations along the way. And so the first deviation kicks in 9 o'clock, 10 o'clock, in the 10 to 11 o'clock hour. And then, Jack, you'll notice we start to push back up and then back down by 4 o'clock. So there are 3 inflection points here that warrant our attention in terms of graphically what the software found when it looked. 8, 9, 10, 11. Good morning, Parmaji. 11, 12, 1. So just using the geography, or rather the geometry of the histogram, we have some clues into some inflection points. If I had to guess, I hate the guessing part because it makes my thoughts transparent, and I like them when they're in my head and I can't be judged. My first impression looking at the chart is that we're headed towards a higher high green dot. My first impression looking at the chart is that, Nathan, they're going to get everybody convinced that they're breaking the high and going up. You see how close we are to it? There's a high here, and there's a high right there. And I have this line right here, which is going to be a green dot when we get to it. Well, when we have higher high green dots, the market tends to drop. It's a pattern 5. It's a pattern 5. If you don't remember what that looks like, I'll get you a copy of that book. Look in your chat box, and here's a copy of the book that I'm about to show you. A higher high green dot is a pattern 5, and it tends to look like this. It tends to go up and drop down. So I don't know why I have a counter trend bias this morning, and that's what I meant by that, Nathan. I don't like it when I have a counter trend bias. What I should be telling you is that at the close of the 11 o'clock bar, there's a really good chance that we're going to see another push up like we did at 10 and 11 o'clock Eastern last night. That's what I should be telling you. But there's a part of my brain that says they would love to trip out all these stops. Here's what my counter trend brain says it wants to say. That's what my counter trend brain wants to say right now, which is probably why we shouldn't listen to it. So I'll just draw it. Where was the bottom of our angle line up here? 2402. $24.02 is quite a ways down, isn't it? Why do I say stupid things? That's one possibility. Just based off of the stop run theory. Yes, Alex, back-to-back inversion. But here's what I'm going to tell you. When we get to the close of the 11 o'clock bar, if it breaks above the high of the 11 o'clock bar, everybody listen to me. If it breaks above the high of the 11 o'clock bar, this sucker's going up, gig to the next line. If it breaks above the high of the 11 o'clock bar, it will continue up. And continue higher. That's how I trade a higher high pattern 5, Jack. When it goes above the 11 o'clock candle and continues, that's an entry into the market long. So we'll see. I got my craziness. Jack, we have different opinions. I don't think Trump is doing anything the banks don't already know about. I think that it's all one giant play. It's an act. And that ultimately wealth and power are the ends of the means. I also look at this news report, and I see that there's a bunch of different things they can use today. They have the PMI, the pending home sales, and the beige book. So there's all sorts of stuff in here today that lines up with the times that I'm watching. So the beige book, Jack, look, is 1 to 2 o'clock. And the 1 to 2 o'clock is one of my times. The PMI and pending home sales is that 10 o'clock to 11 o'clock bar over here. Oh, no, I understand. I'm in your corner. Yep, I'm on your side. CL is at a temporary low. There's a stop run that just took place in CL right here. You can see that it just broke through the stops, and now there's a wick coming up here. So there's a short term, to me, low risk counter trend long in crude until 9 o'clock, 10 o'clock, forgive me. But in here on the histogram in CL, I have a choppy histogram. So CL on the larger time frame, I'm expecting a range-bound market today, consolidation. And right now, the size of that range has been established as 48.21 to 48.70 between the 9 o'clock candle and where we are right now. Halfway in between on CL is 48.46. So the range right now is 48.21, 48.46, 48.70 on crude. Over on gold, market's open here in 5 minutes. You can see where the next selling pressure signal, Bob, is coming. It's at 10:30. So gold is coming to the end of its gravy train, right? And we should see selling pressure at 10:30 in gold. So the market will either go into a range and then break out or pull back and go down. Over on the Forex side, 5 minutes till the open. That was that crazy guy with the New Zealand dollar. Okay, we don't want this workspace open. Bear with me 1 second. I had the wrong Forex workspace open. That's the one I want. There's the one we want. Got the euro dollar, Canadian dollar, pound dollar. Pound dollar. We've got those resistance lines to work with, which is cool. Of all the markets right now, it looks like the euro is the one that's most closely correlated. And on the pound dollar, the dollar is weak. Starting at the open, we had a breakthrough of this red dot. We had a breakthrough of this red dot. And we just had a breakthrough of this red dot. So I'm expecting at 9.50 a punch up in the pound dollar. The same thing is happening across all three of these markets. It punched through the red dot at this point. It punched through the red dot at this point. And the green dots have been ruling the day. See over here, Bob, 540 and 730 were all nice impulse moves up, which tends to make me think we're looking for a punch up at 950 on the euro as well as the pound, because the red dots where the banks had an opportunity to sell, they stood on the sidelines. Same thing happened on the CAD, this last red signal. This was actually a Canaveral pattern. Those of you who know what that is, good for you. It's in the book that I just gave you if you want to read up on it. It's pattern number 7. And now I'm expecting the CAD to continue higher until 1025 or until it hits this line here, which is 86 to 02. It's 16 pips above us, still to go. We'll come back to the Forex charts in just a second. Over here, we're going to go to our garage and try to straighten that out. So this is the futures workspace. We got CL, we got the NQ, money for nothing and your chicks for free. We got a deal on microwave ovens, custom kitchen delivery. Okay. So we are open, and I got to the futures workspace just in time. And let's go from here, shall we? On the CL, the last two selling pressure signals with trend at 901 and 922 have both delivered the market down. The only valid caveman entry on CL, the trend entry, was at 922. Your stop is one tick above the candle. As I catch up here, stand by. So your stop was one tick above the candle at 41. Once you knew the risk, you knew the reward, your entry was short right here. And so I'm going to use my targets on that. There we go. We'll set this as our default. And so on crude, we're actually using the caveman from 9 to 12 up. 12 ticks on that first setup. On the NQ right now, we have a lower low red dot, pattern 4 right here. And I'll get the software to come in and automatically draw those for us. So the way we approach a pattern 4 is we watch for a breakout below the low. 2 ticks, 1, 2. That would be an opportunity to sell short. Otherwise, I would be looking for buying pressure here based off of the pattern 4 signal. 935, 937, period of chop in here. So 941 into 46 is where the trend breaks loose and we get out of that consolidation range. Remember, there is a report coming up at 9:45 and 10 o'clock. So expect some congestion in here. E-mini S&P, we've had some of these little dinky-dink, rinky-dinky-dinky moves. And if you look at the histogram, it's a consolidated mush factory until after 1040. So I would be really careful in the ES until after 1040. Gold, the last move down was a selling pressure signal at 916. Stop one tick above the dot. Entry at the close of the candle. Once you know the risk, you know the reward. 200% of your risk is your reward using that caveman entry system. We're currently in a break-even state because we hit 150% and just hit our target for 12 ticks on gold using the caveman entry system. NQ is getting ready to punch that breakdown point. I am, just for chuckles, I want to put a sim position on in the ES. Okay, 935 on the NQ is a buying pressure signal, so be careful right over here when they come into this section. It's going to look like a breakout, but it's most likely a stop run before a punch up on the NQ. The trend is down though, so if you're following a trend trading system, you're sort of obligated to assume it's going to be a breakout. Your higher probability entry with the direction of the trend is at 937 and 946. Over on the CL market, we have a 934 signal. 934 is a Canaveral. I don't have a rule for the Canaveral yet, so it's essentially the same signal as the last one. Your stop would be one tick above the candle at 933. Your entry would be at 9 25, and you would be looking for a push down into 48.13 and 48.09. If you're a Canaveral trader, however, the brand new low was right here, and the red signal is inside of the brand new low. In your books, that is this signal right here. If I can get there quick enough. Can everybody see that pattern on my screen from the histogram book? And how it looks remarkably similar to the one on CL right now? Alice? Okay. So if you don't want to take a trend signal right here, this is a counter trend component to it. And if I was going to make these two things match up, I would be obligated to put that right there. The target would be the moving average up here. So that's Canaveral setup, pattern number 7 in your books. But again, I don't have a rule set for that in the caveman system yet. Hey, Anthony. Okay. Using the Willy Wonka 2 setup in the NASDAQ, we're looking for a breakdown below the green dot. Once we have the breakdown, we're waiting for a penetration of 6 to 8 ticks, which would be 1, 2, 3, 4, 5, 6, 7, 8. Right here. And your stop would be 1 tick above the candle that penetrated it. So your stop would be right here. This is also a pattern 4 lower low red dot, Bob. So we expect a push up right there. So on the NQ, we had a regular signal with trend long right here. Stop below the dot, starting at 9 o'clock this morning. And that one stopped out right here. And now I just had another stop out for 1.5 points right there. Just trying to keep it real. Okay, if you're trading a caveman matrix setup right now, you have an opportunity. This is a pattern 4 lower low. Normally your entry would have been at the close of the candle. Your stop would have been 1 tick above the dot right here. But because it's a matrix signal, a pattern 4, everything reverts. So now your entry is the dot straight out of the video, and your original risk, which was here, is up here. Once you know the risk, you know the reward. So your break even on this last pattern 4 signal would be 58.0850. Let's see if it hits it. I'll put a copy of that matrix video out for you guys that want to follow the rule set that I'm talking about today. Give me just 1 second. And for those of you that don't have it, well, it helps if you don't type the wrong email address. Slide it. And you can go back and watch that at your leisure. We call it the caveman because it's so simple. Even a caveman could find it or follow it. So if you want to copy that video, you can go back and watch the rules for it right there, Bob. Just some nice mechanical entry rules using the 5 patterns and a trend line. ES is descending lower into that horrifying chop zone that starts here and ends here. So we'll see what happens next. Gold is in a chop zone too. There's a lot of lines here coming into that PMI report. We did have a pattern 4 lower low at 936. The candle to the left was a brand new low. 941, however, is not a brand new low yet. PMI report in 4 minutes, 3.5 minutes. John, it doesn't have to, as long as you're using plain histograms and time cycle markers. If you change from 1 to 5, everything will autofocus to the 5. If you're using another instrument like CL as the base instrument and you change from a 1 to a 5, you would have to change the CL base time frame to match. It's a quirk of the programmer. Yep. Or if you were using it on a tick bar or a Renko bar, you would have to change it with the base instrument being populated there as well. Okay, on CL, with that Canaveral pattern, we're expecting it to come back up to the moving average. However, if you are trading matrix entries and you got to 941, you would have been going short here with a stop just above the dot, and you would have had a loss. And I'll just fill that in right here. And the reason we show these kind of mechanical entries is so that we can see at the end of the session what would happen if we just followed our rules. We're still short on the NQ. We're back up to our entry right here. Our stop is still at 1475. And we didn't hit our break even at 58.08 half. Brent said, can we look at the NQ with the 5-minute signals and the CL? I don't think I still have that chart up, Brent. There it is. So Brent, this is the chart you wanted to review. Okay, so in the Las Vegas seminar, one of the things that we discovered is that you can put the histograms from different markets on top of another market. And one of the things that I've been really fond of, Bob, is placing CL times, crude histogram times, on top of other markets like the ES and the NASDAQ and the Dow, because crude, I have found, tends to drive the show. It's the ringleader. So Brent, down here in my histogram chart, you'll see that I've applied the crude futures histogram times on top of the E-mini NASDAQ June contract price action. And one of the reasons why that's so important is because the correlation is amazing. And it's better than the native NQ signals in many respects. So the CL times on the NQ chart are an enhancement, Brent. They're an augmentation. They augment the results or the accuracy of the time cycles. And so, Brent, the next patch of times that we're coming into on the CL chart, there are 3 to 4 lines in that area, right? Not the most pleasing of circumstances. In fact, we don't break loose until 1040, looking at the 5-minute signals. So 950 is a buying pressure candle. For the next 5 minutes, we should see a push. Jim, did it get up there? Yeah, it did. So if you were trading the Canaveral, just again to reiterate that new pattern that we found. Good job, Wayne. Good job, Jim. Good job, Brent. So again, learning these patterns in these books, these are universal time patterns that over the years we've just uncovered. And I'm excited that it worked for you guys. Good job. So the NQ right now is falling from the 5-minute CL histogram time, Brent. And the accuracy of those signals, in my opinion, is greater than the pure NQ chart with just the NQ histogram times. Bob, we didn't even have a time to talk about that last night, but this is some pretty cutting edge stuff right here. So Brent, you have to have the indicator from the Vegas seminar, which is the multi-instrument analysis histogram. Do you have that one? Flux histogram MIA V1.0. Let me know if you've got that, because if you do, I'll save the template and I'll send you a copy. Okay, this is going to be on sale for a pretty reasonable cost. But do you want to see how to do it without that indicator for now? It takes a few extra steps. Okay. So assume you didn't have this down here. The very first thing you would do, Brent, is you'd come to your 5-minute time cycle markers. And here I have a MACD filter and a power zone trend filter. And the MACD filter is set to a 2-period fast, 10-period slow with no high peak, low peak values. I'm seeing every signal on the chart. And in the base instrument, Brent, I've populated it with the CL07 contract. So you populate the base instrument with crude futures current contract. And then you have to make sure that the base time frame parameter is populated as well. Make sense? So it's going to import all the histogram times from the crude futures time analysis. And you're going to do the same thing for the power zone. The power zone here is set to a 60-period trend filter. But again, we populate the base instrument with the crude futures instrument name and the crude futures time frame, in this case, the 5-minute chart. Does that part make sense, at least so far, Brent? We're sucking the brains out of the oil futures contract times. Okay, so now over here, let's create a template for that. Templates, save as, underline NQCL 5-minute TCMs. So I've got a template for that, Brent, that I'll get you. But you would need a histogram chart to watch it as well. File, new chart. Now we're going to go crude futures, 5-minute chart. We'll load 60 days of analysis and my histogram template that I've got, which is one histo. There it is. Bob, has your head exploded yet? I'm pretty sure it's about to if it hasn't already. I told you it was fun, man. Okay, so now Brent, in here I have to change the MACD to a 210 and the power zone to a 60 so that I can see the upcoming histogram times. Now I go back 1 week to the dotted white line. And so now, Brent, I'm seeing all of the histograms that in the other indicator I could dump down in the bottom, including the 925 and the 920 signal. Okay? So that's a complete analysis, and I'll save that template. Underscore NQCL 5-minute histo. Bazinga. Any questions about this? It's a pretty powerful technique. And this will be in the workspace that I saved today, so you're more than welcome to have a copy of that workspace. My ES trade is up 3 3/4 points right now. I'm going to put a buy stop there, and I'm going to get out at 24.04 because I think it might go that low. Let's take 2 ticks. Well, you know what? I'm going to put it 1 tick below. That's fine for me. Brent, let me just update this real quick. We did hit our target on the NQ. So the entry on the NQ Caveman was a matrix pullback to the dot right here. Our stop was here, and our target was here. So I'm going to record that winner before I forget to. 5, I think it was $5. Yep. Okay. Yep, Jack, I'm going to get everybody the workspaces real quick. We're up 4 points on the ES short. Just real quick, what was our prognostication for the ES on the 60-minute time frame? How far off was I? A little bit. But did I get the direction right so far? So it's following my yellow lines, but Jack, they're all shifted 1 bar to the left. They didn't take out the stops. They just double topped it and they're dropping down. So on our daily time frame, did you see my question mark? To quote Matt Damon in the, what's the movie where he's with Robin Williams and Ben Affleck? I can't remember the name of the movie. When he turns to those college kids and goes, Goodwill Hunting, he goes, how do you like them apples? That's what I want to say when I look at this chart. So on the ES, I'm where I had my red thing and my question mark. That's actually where I'm looking for it to go to today. That's where I'm looking for it to go. Unforgettable. That's what you are. Unforgettable from near or far. File, workspace, save workspace, file, workspace, Ninja Forex. There's our 950 pop on the pound, our 950 pop on the euro. And we are still moving upwards on the Canaveral side until 1025 on the CAD until we hit that 1.3 over there. The euro and the pound are pattern 5 higher high green dots. So be advised there will be retribution for closing at the high on both of those markets. Now, I will save that workspace. And Jack, let me get you the other one, but I need to save it with a new date. Bob, is your mind blown yet? On CL, we had a Willy Wonka breakout. This green dot was penetrated right here. When you have a penetration, we're looking for 6 to 8 ticks below, which would be 33 to 25. So target hit on the breakout right here for another 8 ticks. Gosh darn it. Ninja Trader, you're freaking me out, man. Breakout from here to here. 8 ticks on crude in the direction of the trend. NQ, we expect it to continue to drop until right here, guys. 10:02. So you're starting to get near your end of the line. ES, I think it's safe to move our trail stop down. I'm going to put it above the selling pressure candle at 24.11. And Jack, I'm going to get you this template, this workspace with a new name for today's date, which is holy crap, May 31st. Where did the time go? Okra Coke. Okra Coke. Okra Coke. Darn it, we're really close. I'm going to move my trail stop down even more. We're halfway. Will we get to 24:02? What say you? Pretty close so far. Seven and a half points. 8 points. $10 is the other econ. That might push us over the top. Okay. So I need to get you workspaces. Stop jacking your jaw, Lydic. Jack, stand by. It's coming up, brother. I share my knowledge with you because I am a benevolent demigod. On the ES, we are at the 10 o'clock signal. You would be advised to start to tighten up your stops so close to your target. I'm curious just to see if I get down to it. Garage webinar workspaces. Woo! Look at her go, boys. Woo! That is the theme song from Raising Arizona with Nicolas Cage. And I hear it when the market sells off like this. Because bazinga, there's my target on the ES. And right down here, I am a buyer with a 5-point. I'm going to have a 5-point stop at 98. If it'll fill me. Yep, this is the music I hear. When they pull this SHIT.
Order filled.
There's my red dot, Brent. How do you think of them apples? Here comes the verse. I love my job. Sorry. So I just want everyone to remember that Gig said it was going up today. I'm just teasing, brother. I'm just teasing. Yes, Derek, I was off a little bit, but I committed to the trade. You saw me. I put it on. I've read the price action. Derek, why you got to be a buzzkill, man? And I caught the bottom so far. So this technique works, is all I want you to say. All I want you to see. That technique that we used this morning is a good technique. Yep. Yeah, Derek, you understand the pat process. I appreciate that. No, I understand. Okay, so this, to me, the larger move, that was there. The ES, I misread the 60, but we caught the direction. Everything is off 1 bar so far on the ES. Gold, this is where the push is coming right here. We're at the 1030 signal. This is where they trip the stops and just accelerate it up on gold. So everything is about to reverse coming into this 1030 signal. These moves that we were seeing, I think we're about to see push the other direction after that big stop run. Okay. I'll keep track of the other stuff here momentarily. I am watching presently for a breakout of the 10 a.m. signal on CL. We have a 10:07 signal coming in a minute and a half. I'm looking for 6 to 8 ticks below the green dot right here. We've just pierced it. So I would be looking for a short from 48.20, 48.19 with a stop above 48.25 right now. Using the Willy Wonka 2. Okay, we're at break even right now on the stop because we've made it 6 ticks. I'm looking for 8, so I'm looking at a +1 condition right now on CL. Let's see if they come down and hit it. And one more tick. I'm at +5 right now, according to my rules. So that would be 20 to 15, and I'm out at +5. If you're holding to 8, you're right there and you just got filled. Nice breakout on CL. Save the damn workspaces, Lydic. Okay, so I'm going to upload. Thank you, Derek, for keeping me real. I want today's futures workspace, Forex, and 60-minute chart uploaded. Okay, so if you want the 60-minute analysis with all of the daily marker construction lines on it, please look in your GoToWebinar chat box. And you should have that one. If you would like today's futures workspace, it is now pasted. So theoretically, Bob, if you save these files to your PC right after you purchase the software, you'd have all my settings and stuff. That's what we do in the class. And then if you want the NinjaTrader workspace, or I'm sorry, the Forex workspace that I'm working from, that is the third Dropbox link. So you guys now all have my workspaces, but Brent, I'm going to get you the template, right? I need to get the template here for you. So upload the files. Let's create a new folder called templates. And now we'll put Brent's folders in there. NinjaTrader 7, templates, chart. Okay, so Brent, here are the two charts that we just created, and I'll get you links for those, okay? Share. So this one is the NQCL template 1, and that was the histo. And this one, Brent, is the time cycle marker chart. So you guys are all caught up now. So far, so good? No setup on CL right now. It's a matrix. It's a matrix entry on the CL breakout. I'm sorry, on the CL downtrend. Because of this pattern 4, I was looking for a pullback up to the dot and then a drop, so I didn't get filled right here. If you traded this as a breakout, like a Willy Wonka setup right now, you would have been looking for an entry 2 ticks below the last matrix signal, which was 1, 2 right here, and you would have another 8 ticks on the CL. So 06 to 94, you're out +7 because you moved your stop 1 tick away. So right here you got +7 on the CL. And I'll go over that setup with you here real quick. How's everybody doing so far? Hanging in there? $10.10 on the ES is a pattern 4 lower low red dot. Both it and the candle to the right. NQ at 10.12 is a signal with trend right now. Signal with trend. Your stop would be 1.25 points away from your entry right here. And we'd be looking for 2.5 points on the short. So at 10.10 on the NQ, using the same caveman entries, we didn't get to break even. We got awfully close, within 1 tick, those turd buckets. Didn't go down far enough yet. So the stop for that setup mechanically is 1 tick above the dot. Okay, if you have, in the caveman system, there are 3 types of entries, or 2 types of entries, and then there's the breakout that I'm teaching you here today. In the caveman entry, if the trend is down and you have a selling pressure signal that is not a pattern 4, the rules are as follows. Your stop is 1 tick above the dot. Your entry is the close of the candle. Stop, entry. Your target, once you know your risk, is 200% of your risk below you. So 2R equals target. Make sense, everybody? 150% equals break even plus. Now this system embodies the best parts of everything you've taught me. Number 1, trade in the direction of the trend. Number 2, have a risk reward that is worthy of the entry. So if you're going to risk 5 ticks, make sure you're reaching out for 10, which means you only have to be about 45 to 50% profitable. Number 3, have a break-even condition. Make sure you don't let a winner turn into a loser. So the caveman entry system, whether it's a green dot like this or a red dot, whatever direction the trend is looking, that's what we're going for. So that's condition number 1 with a caveman style entry. Condition number 2 assumes the trend was not in your direction right away, but caught up. If you have a selling pressure signal over here, Bob, but it does this, and it closes below the moving average, all of the rules are in place, but it's based off of this candle. Your stop is 1 tick above the candle that closed below the moving average. Your entry is the close of that candle. Your target is 2 times your risk, and your break-even condition is 1.5 times your risk. And in the video, you'll hear me refer to this as a crossover candle. It's a variation of this one, but we're below the moving average. Does everyone understand the difference between a conventional signal with trend in the caveman and a crossover candle? It breaches the moving average and gives us permission to get in. In both of these conditions, your minimum risk is 5 ticks, and your maximum risk, for me, is 10 ticks. And you can adjust those values based on your risk appetite. The matrix variation is the weirdest one, and I go over it in detail in the video. If you have a downtrend and you have one of those lower low red dots, there are two opportunities here. One is a caveman entry. Number 1, your original stop and entry would have been here. This would have been your original entry, and this would have been your original stop, right? But Bob, we have one of those pattern 4s over here, right? And so in this condition, I have a rule set in that video that I gave you where I wait for the market to pull back up into the dot. So the dot becomes the new entry, and my original risk is up here above the dot. Everything shifts to accommodate this potential for a retracement. So stop 1 becomes stop 2, and then we're looking for, again, 1.5 R and 2.0 R. If you don't get that, there's another opportunity. Is everybody with me so far? There are 3 caveman variations: the pure signal, the crossover signal, and then the matrix or the pattern 4, pattern 5 variation. Anyone confused by any of those 3 things? So we were just stopped out in the NQ. The second set of signals that I'm teaching, Bob, it's in the video that I just gave you, the caveman entry video, the screencast. And I'll make sure I email you the link. Stand by. You need to go find Mrs. Mason and get the Mason credit card. After today, I don't think you're allowed to come tomorrow or Friday. I think you saw too much. I've given you too much. I'm just teasing. Okay, so the again, the caveman video is in your chat box right now. And Bob, I forget your email address. Stand by. It's on the way. But these are the setups that I've been teaching people. Now, everybody understands those. If you applied that to CL just now, you were stopped out. So on crude, Bob, just now the entry was the close of the candle. There's the dot, and our stop is one tick above the dot, right? So CL would have come all the way up to the stop and taken us out for a -5 hit. Now, the other trade that I teach everybody is the Willy Wonka 2. Think of this trade, the one I just taught you, as a Willy Wonka 1. In the movie Willy Wonka and the Chocolate Factory, what do you find in the candy bar? And the golden ticket is a good thing, right? So I have two setups, the Willy Wonka 1 and the Willy Wonka 2. The Willy Wonka 1 is a signal with trend, or what I call a caveman entry. It's looking for red dots in a downtrend, green dots in an uptrend, and everybody understands that. A Willy Wonka 2 is a breakout with trend. It's a breakout with trend. And so I have a YouTube video on this, and I'll give you a link to it in a second. What I'm watching for is essentially this. If the trend is down and we have a candle with a green dot, ordinarily, Bob, this would be a buying pressure signal, right? We'd be looking for the banks to push up. But what if they don't? What if they choose to let the trend continue? How would we know that was happening? And Bob, the way I look for it is this. If the market comes down and penetrates the dot height, the dots are pretty visual. Everyone can see and understand them. If it pierces or touches, and some people have different penchants for their entry. If it touches or pierces, we're looking for a continuation on a 1-minute time frame of 6 to 8 ticks with a stop just above the candle that did the touch. Does that make sense? Because it means essentially buyers didn't actualize. They stood on the sidelines, Bob, and they let the sellers continue to push them around, right? And the same thing works in reverse. If we have an uptrend and we have a selling pressure time and they break through that area, Bob, either touch it or pierce it, I'm looking for it to go up 6 to 8 ticks with the stop just below the candle that touched or pierced it. So right now on CL, even though it's going higher, the trend is still down. The EMA is going to take forever to catch up. And so, Bob, my short would be at or below the dot height. And the dot is currently set to
5 ticks below the high or low of the candle. So a Willy Wonka 2 in here would also be a trend entry, but it's a scalp. And I'd be looking for 6 to 8 ticks, which would be 82 below. It's a variation of my good friend's trade setup, the game on breakout trade, I guess you would say. So Ron was first to the party with that methodology, and I found a way to personalize it that felt more comfortable to me in the way I interpret time signals. Where Ron is using structure for his breakout, I'm using the actual dot. Does that make sense, what I just displayed, Bob? It's a failure of the counter trend behavior in the direction of the trend. Until the next signal. Jack, until the next selling pressure signal, it's valid. Good question. All right, you now know everything I know. So over on the NQ, Bob, we had one of those breakdowns right here, right? There's the green dot. We're looking for a failure. There's the touch and the pierce right there, brother, right? So 6 to 8 ticks is how far down? It went 3 3/4. So when I get to 5, I get to +1. When I get to 8, I go to +7. So this setup over here would have been a +1. So it made it 5 ticks in the direction, 6 ticks in the direction, and then I go to break even. And then at 10:22, I have a Willy Wonka 1, a signal with trend in the NQ. Close of the candle is the entry. There's the signal dot, and there's the stop. It hit the stop. So a 1 3/4 loss on the NQ. And now there's nothing to do. So very mechanical, very methodical ways of getting people started into the idea of thinking about, and I'm not expecting you to get it all today. I want you to see that there is a mechanical platform for you to launch from. It's not my discretion. So if you didn't have a wiggle, like we discussed last night, I'm giving you a safety buoy to hang on to that might work for you short term. A bouncing off point. So over on the ES, we are using Brent's technique of putting crude histogram times on the E-mini S&P, and so far that's been pretty stellar, right? We have crude histogram times there, and those signals have all been pretty good so far. On gold, I'm just going to pull this chart over here so I can update my caveman stuff, my trend signals, my Willy Wonkas. And I'm just going to fill in the stuff. Yep, that was a -5. Over here. This one. Was a -5. This one was a -6. But this one was a +10. Okay. And then this one was a +8. Sorry for getting a little hyper on you guys. Didn't mean to get as excited as I did this morning. It's just unusual for me to get that many things that large correct at once. Okay, so over here we had a -5. I just like keeping track because otherwise I don't keep track and it catches up with me and I don't know what the system did at the end of the day. Okay. So gold right now is long. Willy Wonka 1. Bazinga. There's the flashback, Jack, at gold. So Jack, in this instance in gold, we're looking at the signals from 24 hours ago. These are the histogram times from gold's movements yesterday. And the next signal from yesterday is 8 minutes from now, and it's a buying pressure signal 8 minutes from now, Jack. So instead of looking every week, 2 weeks ago, looking at consecutive Wednesdays, this chart is looking at what happened yesterday and projecting those times forward. Jack, you want me to keep those signals visible over here? In addition to the other stuff, right? Okay, sorry about that. Now that I know you're looking, I'll keep them over here. Gold is the blonde who breaks my heart. No offense, ladies. Crude is the brunette that I take home to mom. Again, I try to use word pictures that make sense to me. I am 4.5 points on my single contract counter trend signal in the ES. So I'm going to cancel that. I want to move my stop up 1 tick above. And I think if I get to 5 ticks or $5, I'm going to sell it. Okay. Stop hit on gold. Broke my heart. And you know from other sessions that gold is usually the one market that the caveman sort of struggles with. Okay. Next signal on the NQ is at 1039. I'm going to get rid of these fib lines that are all over here. CL has a signal with trend at 1035. There's the close of the dot, the close of the candle. The dot is at 48.08, which means the stop is at 48.09. Once you know the risk, you know the reward. So 05 to 09 is 4 ticks, which means I'm not at my minimum. The minimum has to be at 10. So right now, my break-even condition in CL is 47.98. 47.98. Jack, you got 5 more minutes till the buy in the flashback on gold. So 4 more bars on gold. ES got to within 1 tick of my entry, of my exit. And Tim, I'm going to start to ease it on up. So it's $1 locked in on the downside. Can't go broke by taking profits. I'm at 1040 though, Tim. So Bob, in terms of what I'm expecting, the last pure signal that was with trend was 955. The next pure signal is 1040 right here. So I may have made a mistake by not taking profit right here, because they might open the gates of hell right here and unleash the next down move. But I had a pretty good run to the downside. I'm going to let it fly, give it some wings, and let it do what it's going to do. 4.5, 4 3/4. 1 more tick to go to 5. I'm on 5, which means I move my stop to 1 tick below it. And I am out. Nice setup on the ES today. We go back to our daily time frame where we did the analysis there. And I want you to see where we're at. So now, Tim, the dominant line is this line right here. We've established that. And can everybody see what's going on down here? So we are living in that box. And so I expect these reactions in here. Right there. All right. Good stuff. So I'm going to shift all my bars over. 2 bars. On the 60-minute workspace right here. CL, watch for CL to go up right here. We're at the lower angle line that we've been looking at in that market. I expect us to come back now to 48.21. So there's 13 ticks above us. Gold maxed out at 1030, Bob, on the 1-hour chart, and you can see that it's already starting to push down over here. So that signal is in force right now. Over on the Forex charts, the close of the 1025 candle in the we got to our target at 35.02, and then this was a signal with trend at 1025. If we apply the caveman rules to this, the close of the candle, and then the stop is one tick below the dot, we would be looking for and would have hit our target right there just now. The euro dollar is following its time sequence, and you can see this is the first place that the sellers have actually jumped on during their turn at bat. So this shows the dollar is sort of stabilizing, if not strengthening, against the euro. And the next time we're looking for this move to stop is 11:55. So we're living in this window right now, but you would have to fight through all three of these daily cycle marker lines to get lower. So you should see a touch of this one, followed by a touch of this one, followed by a touch of this one if the downtrend is going to continue. The dollar is still weak against the pound because we had a Willy Wonka 2. Bob Mason, we had a pierce of that dot. You see what I mean by that? So at the econ, this was a long entry right there. We shouldn't have gone up at a selling pressure time. It means that the banks had the opportunity, it was their birthright, and they stepped aside and said, yeah, we're not going to sell right here. We know we can, but there's some work to be done up top. We're going to let you guys push it higher. So you're starting to see the framework of those kinds of thought processes. Man, that's hilarious. Sorry, Lindsay. Let's go back to the futures workspace. We'll figure out what's going on there. Okay, so Tim, on the ES, let's see if they push down or break through here. My thought process is that they start to stabilize and push up from here. CL, we had a stop out. -4, actually -5. Smallest stop we can have. And not expect to get taken out. On the NQ, Bob, we haven't had a pierce yet. And so this 1039 signal is in play. The next signal with trend is at 1046. But look where that moving average is. Even if the trend reversed, look how long it would take for that to catch up. It's pretty crazy. Jack, you have your buying pressure signal in gold right here using the flashback. It went up from 68.4 to 69.1. So what is that, 7 ticks? But now it's returning back down. It didn't punch through yet, so we'll keep an eye on that. There it goes, Bob. 1039 on the NQ. The song that comes to mind is this song. And left, and right, and left, and right, and glide, and push, and glide, and push, and glide. Back to my roller skating days. Ain't no stopping us now. We're on the move. I did not record today's session, but I know for a fact that some of these nerds out here did. Which one of you guys recorded today's session? This might be one worth passing out to everybody at the end. I know somebody did. I know because anytime I say something bad, someone on Big Mike's has a recording of it. So someone has to have the good stuff today. Anybody? Wow. That's tragic. I did not record today. All right. Sorry, Clint. Oh, Chris is. Chris, can you upload it somewhere that I can download it from later, or do you need it to is there some way you can get it to me? All right, that'd be great. And Clint, I'll send it to all the customers later today once Chris gets it over to me. I really appreciate that, brother. On the move. Okay. So now we have another signal with trend here at 10:45. There's the close of the candle. There's the dot. I should, as a general rule, record everything, but sometimes my hard drive gets so full that I would rather not be bothered. And that's something I got to figure out. I think it's time to wipe these computers clean and start over. I am turning into a regular bare-chested chocolate-eating DJ. I have an external 1 terabyte. And I've been pushing everything off to my secondary drive, which is a 1 terabyte too. But yeah, maybe it's time. Prices are lower for the SSD. Yes, they are. They're really low. Caveman Willy Wonka song pick. It's been a great session so far, yeah. So Jack, your vertical on your 24-hour analysis on the gold has been pretty good so far. I hope you took advantage of some of those moves. Pretty sweet. Thanks for bringing that to my attention. So Bob, what's neat about the difference of these two charts, if you haven't figured it out, the chart on the top in gold is looking at previous Wednesdays. The chart on the bottom is looking at yesterday. And so some customers will use both as a radar. Jack took $90 off of that one. Sweet. So the one yesterday, Bob, encompasses the most recent time signals. And the one up top is the one that's day specific. Does that make sense? Okay. And it's a question of which one works better for you and or if you're focused on one market, but just shows the methodology between the two. I don't show those in the weekly webinars because I think it's too much for people to comprehend in that 3-hour session each week. If I show them both, their heads go poof, as I would imagine your head is going poof. It's a lot. So historically, when we come into a chop zone, that's a pattern number 3 in our histogram guidebook. We're going to look at what the range of the market was inside of that chop zone. So in this case, it was 950 to 1040. So this is the box that the market was range bound inside of during that choppy section. And so historically, what we're watching to see is which direction the market will emerge from that choppy section below. Jack, whatever makes you money, brother, I could care less if your antique learning supersedes my flux stuff. I'm thrilled you're here and doing and making money, brother from another mother. So we're watching now to see, Bob, which section the ES will emerge from this choppy section. Will it emerge this way, or will it emerge this way? If it does, Bob, I'm looking for 100 to 200% of this zone above me or below me when it emerges. And you probably already have a sense of which way I think it's going to go. I understand, Jack. NQ, stop hit to the tick. The most I can lose is 10 ticks. There's 4 ticks per point, so that's 2.5 points maximum I can lose on that pullback. So that's a 2.5 point max loser on that market. The next signal coming is 1106. On the CL, Bob M, we have a Willy Wonka 2, a breakout. You see right there where it touched and pierced through? The buyers stood aside and let the sellers drive right over them. 01 minus 8 is 93. When I get to 6 ticks, I go to break even plus 1. So 01 minus 6 is 95. I am now plus 1 on that setup. And I'm waiting for it to hit 8 ticks below. Jim, I do have a Willy Wonka 2 setup video. If you give me 1 second, I'll get it for you. Come on, crude. Trading time cycles with the trend is the video, and I just put it in your chat box. And if you go to our YouTube channel, you can subscribe. And if you guys subscribe, you'll get these videos as they come out. If you'd like to subscribe, my channel is at this link right there. So absolutely, is there a video on it for sure. No, that stinks on crude. We should have got 8 ticks. I only got 1 out of it. But like Tim said, you can't go broke taking profits. All right, brother. So now, Bob, over on crude, you see all those green arrows, those pattern 4s? What is that sort of telling you to look for? Right at the time we were waiting for at 10:53, right? Oh, no, I understand. Oh, man. So, relative to what you heard last night and what you've seen so far this morning, are you encouraged even more or nervous in relation to what your expectations were today? Are we warmer or cooler? Okay. Take care, Jack. Thanks for coming. Have a wonderful day. Bob, I can't. For me, the trend changed on the NQ right here. At 1022, for me, actually it changed at 1012. So in my head, as weird as this sounds, I have a trend line in my head that's this. Does that make any sense? I don't have an indicator that'll do that yet, so I can mechanize it for people. So all of the signals for trend for me were here, here, and then the breakout right here. But because of that moving average, what I'm teaching with the caveman and the breakout entries doesn't apply. It moved that far that fast. But in my head, it's been this. But I'm glad you're enjoying it. Next signal on the NQ is 1106. CL right now, we're looking for a breakdown. That would be a touch or a pierce of 4791. 1108 is the next signal with trend. On the lower histogram of the NQ, you'll see that there was a bump right here, followed by another bump there, followed by another bump here. So the minimum of the bump was right there, which was this time. The maximum of the bump is where we are right now, which is right here. So Bob, that explains why we're seeing the congestion that we are. The minimum was at 1055. The maximum was at 1101. So up here is 1055, and over here is 1101. So you can find intermediate signals by looking at the geometry of the histograms. So theoretically, Bob, if there was a dot here, it would be 5 ticks above, 3 ticks above, right? Let me see. Time cycle marker separation is 3. Yep, so there would be a dot if this was a real puncture of the histogram right there. So we'd be looking for a breach of 91.75 to go long. But the next signal is 1106 down below. How about you line up your stuff with our times? Go the other way. But I hear what you're saying. As excited, no, I understand. As excited as you were last night, I understand that this is still an audition and you're by no means committed to anything, so don't let me put any pressure on you. Matter of fact, I almost expect you to not ever purchase. Only about 5% of people that see our presentation ever get the software. So we'll have fun while you're here. Customers, anybody have any questions? Any concerns? Anything that doesn't make sense? Anything you want me to go over? Any market we haven't looked at that you want me to reference? We've got about 25 more minutes left with each other. ES is still inside of its chop zone range. The caveman entry was just triggered because this was a pattern 4 lower low. Your entry would be at the dot, not at the close of the candle. Your original risk was from the close of the candle to one tick above the dot. So that would be your original risk. We'll move that above us. So now your stop is up here on CL. And we are looking for we're in the green right now, but we're looking for break even at 85 and exit at 81. Okay, on the NQ, we had a crossover set up right here, and it broke down. So the first trade was a stop right here, and now we just had a pierce. So it turned from a crossover to a pierce and just went 8 ticks in our direction. So we lost it and then we gained it back. $11.16 is the next signal in the direction of the trend. ES has not broken out of its chop zone range yet. The next signal coming is at 11.20. Okay, target hit right now, Bob, on CL. Short from the dot, and we're out. $16 ticks. Giga, Canaveral can appear anywhere, but the closer it is to the MA, the harder it is for me to read. Chris, it can be overlaid. It doesn't have to be a new installation of the software, I believe. And Ron can confirm, does the Vegas release of the Flux Pro or Investor, should it be an overlay on the original installation, or can it be used as a new installation of the software? I believe the answer is overlay. But Gig, that signal on the NQ is a Canaveral, theoretically. Right here, this is a pattern 7. There's the brand new low candle. Right here, Gig, right? And then this signal is captured by that inside. So theoretically, there's a low risk. It shouldn't go more than 2 ticks down. So your stop would be right here if you were counter trend. So it's a Canaveral and a pattern 4 right there. But if it breaks through that, it'll probably continue down until the next signal. It means the Canaveral's been invalidated. As far as our signal with trend, Bob, there's the dot. 1 tick above the dot is the stop. Once you know your risk, you know your reward. Your break-even condition right now. 1 tick. Basically paid for your trade. So Gig, that Canaveral is still in play. This bottom was not violated yet. So in theory, the NQ has the potential now before 1125 to go up to here. Following this pattern. Right, everybody? Anybody long in the NQ off of the Canaveral? Okay. On the CL, we had a puncture of the dot right here. The rule says that the stop is 1 tick above the candle that punctured you, so that trade, if you took it, was stopped out. -8. Which sucks because it went right to the tick. I've got about 10 more minutes with everybody here. We're at the 1120 signal on the ES. Let's see, Gig, if that signal pushes us up into the breakout of the range or if it fails. If you're looking for an exit on the NQ, try to get a few ticks before the MA, which would put you down towards 88.50. There you go. If you're in the Canaveral, you're out. And that, Bob Mason, is pattern 7 in your book. Ah! It's hard looking this pretty, Howard. It's hard to be this pretty, Howard. Ah. Nice execution of the Canaveral. Bazinga. I'm just lucky. That's right, Gig. I am the luckiest SOB alive. Ah. And you know what? Man, we've come far, Gig. You, all of us, you know? The stuff we've learned. In the 9 years, gosh, you've been with us most of it, right? We've really come a long way, haven't we? And it cost a lot. I was talking to Bob last night about, you know, all the walls that we hit. You were with me on Skype when we came up with Orion. And these discoveries, they just didn't, you know, come out of the air. There's thousands of hours of screen time behind that sort of aha moment. So I'm really excited and at the same time appreciative of each of you and your contributions towards spurning us to the next level of analysis. It's really been wonderful. I mean, if you'd have told me a year ago that we would be approximating GAN's square 9. And Gig, if you'd have shown me this chart and said, Michael, in a year you're going to have something like this, dude, I'd have said you were crazy. There's no way a year ago that I would have had this signal, and you know that, right? Absolutely no way that we knew this was coming and then that back up. And so, you know, but everybody here had a part in it. It wasn't just a me or Ron thing. Every time you ask a question, every time you show up to a webinar, we're doing it. It's an us thing. And I want to make that clear. Everybody here is part of that journey with us. So thank you for that. You don't think you're helping, but you're helping. Every time you ask a question, every time you point something out, every time, like Derek, you say something that keeps me from getting too cocky. Those are all positive things. At 11:25, we have a higher high green dot. That's a pattern 5 signal. So we would want to look for a breakout of the NQ 1-2 ticks above. That would be a breakout buy for 6 to 8 ticks on the NQ right here. Clint, the no touch indicates an aversion to the line. And historically, when there's a no touch condition, this is what happens. Let's say you have horizontal lines like this. And let's say, Clint, it comes all the way up to here and misses. But then, Clint, it comes back down to the next line like that. What it indicates is that because it missed here, it's going to go back and drop to the next level. Not enough energy. Must drop down for more energy. Does that make sense? The image that I have in my head are two magnets. Also, this one is what I really think is closer to the truth. If you have two magnets and you put them end to end like this, Clint, the closer you try to push them together, the harder they try to push apart, right? You ever do that when you were a kid? Take two magnets, flip them over, and they don't stick, they push? I think this is more closely analogous to what's happening. But in that case, I expect it to drop to the next level down when it misses. Okay, so Bob, there's the selling pressure signal, the pattern 5 at 1125 at the moving average. I hope you saw some confirmation over on your order flow or whatever you got going on your chart over there. The next signal coming is at 1132. Okay. Starting to get hot up in my office here. Are we clear on the ES, what I'm looking for? Whichever side of this zone we're breaking out of, I'm looking for a 100% move in the other direction. So if we break out above, I'm watching for it to come up to here, and then potentially up to here. And on the ES, same thing. If it breaks down below, I'm looking for it to come down those directions or those distances. Target 1, target 2. Based off of the pattern 3 chop zone methodology. Everybody clear on that? Whichever way it breaks out, your stop is above the zone or below the zone. It's a big risk. 402. It's basically a $9. It's a $9 trade. If you wanted to be conservative about it, put a line halfway through the zone as your stop. That's the 50% line of the zone right now, Tim. You see where it's finding resistance right here? No mystery why the market is hovering at the 50% mark. So put your stop above or below the halfway point, whichever direction it breaks out, and look for at least a 2-to-1 risk reward, possibly a 4-to-1 risk reward. Research that adequately before you engage it. Okay, Bob, last setup on CL was a signal with trend at 1126. There's the dot, one tick above the dot is 94. There's the close of the candle here at 87. Once you know the risk, you know the reward. 200%. We just hit 150 for a break-even condition. Let's see if we get to 200%. On the NQ, we have a pattern 4 lower low red dot right here with a stop run. So this is the potential to be a reversal to the upside. Watch your order flow for any indications of a flip in the bid ask. It would be counter trend right now, in my opinion. Okay, so on CL we got within one tick of my target, so I'm going to call this a halfway. Right there would be halfway to my target at 7 ticks. So if you were going to trade the NQ short, you would look for a stop or a breakout 1-2 ticks below the low of that pattern 4 signal right here. The next signal coming in the NQ is at 1137. It's getting hot in here. There's the breakout. We're looking for 6 to 8 ticks, right? Did we get it? 1, 2, 3, 4, 5, 6, 7, 8. Bazinga. Hello. Hello, little NQ. Okay. CL, if you didn't hit your break-even condition, you're definitely out right now because it touched your target. If it touched your target, the rule is move your stop 1 tick away, in which case you would be plus 13. So it came all the way up, missed the break-even stop, but then came all the way down and touched the target. You're not going to give all that back, right? So, good beans. All right. Let me do this. I'm going to strip these over here and just add up some stuff real quick. See what the rules did for us today. If anything, it might have been a crappy day. I don't even know. 39 minus 8. Okay, so far in CL, you are up 31 ticks. Following the caveman entries, the Willy Wonka 1s and the Willy Wonka 2s on the CL chart. So Bob, you got to see that mechanically play out, which is nice. Even if you didn't understand it, you knew that there was a mechanical, discretion-free rationality for it all. My opinion was not necessary. As the moderator of the room, I feel as though my opinion should carry substantially more weight than yours. NQ, it doesn't look like fared better than that, though. Let me add it up. 5 plus 2 plus 2 minus 2 minus 2.5 minus 1.75 minus 2. You finished today, if you mechanically followed the rules, basically flat. Not counting commissions, up a whole point and a quarter. So you're up $20, not counting commissions. On the ES, let me just run the number on that. Account performance with just the ES today was $725, which is 14.5 points using those methods that we taught you earlier. And that was a nice setup. Okay, so those were the 3 so far. And now on GC, the blonde who breaks my heart. Let's see how badly she crushed our souls today. I just got to pull apart these losers from the winners so I can see them to add them up. Calculator, please. $12 plus 10 plus 8 plus 12 plus 1 plus 9 minus 8 minus 9 minus 8 minus 5 minus 6 minus 5 minus 5. We finished. Plus ticks. Plus 6 ticks. So far, we are profitable, theoretically, of course, across all 4 markets today. NQ and GC perilously close to break even. But again, that's just using these techniques that I taught you earlier. The signals with trend, the crossovers, all those setups. George, they're anywhere from $5 to $10. On the NQ, they're $5. On CL, they're $10. On gold, they're $10. On the ES, it's $12.50.